What if I told you the Fed might actually raise rates instead of cutting them? Not next year, not eventually, but this year. Everyone thought borrowing would get cheaper in 2026, but that entire narrative is starting to break. And if you're buying a home, investing, or even just trying to manage your monthly expenses, this changes everything. Here's what's happening right now. Gas prices are rising, inflation is starting to heat back up again, and long-term interest rates are already climbing. Because of that, the chances of a Fed rate cut are fading fast. In fact, Wall Street is now pricing in something almost nobody expected, a possible rate hike. This is a complete reversal from the beginning of the year when everyone was asking how many cuts we would get. Now the question is whether we get any at all. What triggered this shift is simple. Oil prices spiked due to global tensions, which pushed gas prices higher. And gas prices are one of the fastest ways to bring inflation back. A lot of people think inflation is gone, but it is not. It has just been waiting for a spark, and this was that spark. Now here is something most people do not understand. Rates do not wait for the Fed. They move before the Fed. Mortgage rates are driven by expectations. When investors believe rates will stay higher for longer, long-term yields move immediately. That is exactly what we are seeing. The 10-year Treasury jumped from around 4% to roughly 4.4% in a short time, and mortgage rates followed, moving from under 6% to over 6.2%. That happened before any official decision was even made. Now, the Fed is in a tough spot. If inflation rises, they need to raise rates. If the economy slows, they need to cut rates. But right now, both could happen at the same time. That creates a policy trap. And if gas prices stay high long enough, consumers start cutting spending, which slows the economy while inflation stays elevated. That is the scenario the Fed is trying to avoid. So what does this mean for you? This is where people lose money without realizing it. If rates stay higher or go even higher, mortgage payments increase, buying power drops, and your monthly costs go up. A lot of buyers are sitting on the sidelines waiting for rates to fall. But what if they do not? Or worse, what if they go higher first? Waiting could actually cost you more. Boca Raton Real Estate Market Watch. Now let's look at how this is playing out in a real market like Boca Raton. Because this is where theory meets reality. Boca is no longer the crazy seller's market we saw a couple years ago. It is slower, more balanced, and buyers are starting to gain leverage. The average home value is around $558,000, down about 2.8% year over year, with homes going pending in about 51 days. But other data shows median prices closer to $930,000, with homes sitting around 95 days on market. In higher end segments, average prices are around $1.2 million, with homes taking over 110 days to sell. That is not a hot market. That is a shifting market. In single-family homes, prices are still strong, often in the seven-figure range, but homes are sitting longer, closer to 3 to 4 months. In the luxury segment, sellers are getting about 94 to 95% of their asking price, which means buyers are negotiating again. Condos and townhomes are where buyers have the most leverage. Prices may be lower, but days on market are much longer, around 120 days or more. Inventory is higher and sales are slower. That imbalance creates opportunity. This is where deals are happening right now. Here is what most people miss. Strategy matters more than ever. If you are a buyer, longer days on market give you negotiating power, especially above the $1 million price point. If you are looking at condos, you need to pay attention to HOA fees, reserves, and future assessments, because those are key leverage points. If you are a seller, overpricing your home will cause it to sit. You need to price based on recent comparable sales, expect longer timelines, and make sure your home shows well. Condition matters more than ever in this type of market. So here's the bottom line. The Fed is shifting, rates are rising, and markets like Boca Raton are already reacting. This is not a crash, but it is not the same seller's market anymore. It is a strategy market. The question is, are you adjusting or falling behind? If you want to stay ahead of what is happening in your market, make sure you hit subscribe and drop a comment below that says Boca, and I will break down your specific situation. Because in this market, the people with the best strategy win. Until next time, this is Joe Hillner with Guaranteed Home Sales signing off for now. Go serve big, everybody. Be nice to each other, and I will see you next week.